Hello, this is Eric Parnell, Chief Market Strategist from Great Valley Advisor Group, and it's happening. We've talked about it for over a year and a half, but we're seeing the forces and the seeds of a renewed rise in inflationary pressures. It's the number one downside risk for financial markets, and we're seeing those forces grow in a number of different ways. We're seeing inflation expectations rise to their highest levels since 2023. At the same time, we're seeing inflation readings on a monthly basis coming in hotter than expected. And we take a look at the economic and policy front as we go through 2025, and forces such as tariffs and the recovery from the California wildfires have an inflationary effect, more likely than not, over time. So this raises a key question: what to do from an investment strategy standpoint if these inflationary forces continue to take hold? Now, the one thing to look at from a stock perspective is sector performance. We are coming off of an unprecedented stretch of sector leadership from the technology sector going all the way back to the mid-2010s. And the question becomes, can this continue in an environment where we see higher inflation? These are great companies in the technology sector, but there are other sectors of financial markets that tend to do better during an inflationary environment. The leader among these is energy. If we take a look at the correlation of returns between technology and energy in an inflationary environment, one of the things that we see is that technology stocks have a negative correlation to inflation. What does that mean? In a rising inflationary environment, technology stocks tend to be flat, if not down. Conversely, in a high inflationary environment, one of the things that we've seen throughout history is that energy stocks have a much more positive correlation to inflation. What does that mean? Energy stocks tend to perform well during periods of higher inflation. We saw this phenomenon play out during the late 1970s, and we also saw it again in 2022 when we had our most recent inflation outbreak. We saw tech stocks perform worse than the S&P 500, which was down over 20% in its own right. On the flip side, we saw energy stocks have their best performance in years, posting strong double-digit returns throughout most of the period of high inflation. Whether this happens again in the future remains to be seen. This highlights a key point that we should always keep in mind when it comes to long-term investing. Sectors are always moving in and out of favor with one another. Technology is led for a period of time, and the question becomes, as the economic environment changes, will technology continue to lead, or will there be new sectors that have been overlooked by the market in recent years that move into leadership? Maintaining this focus and this diversification, not only across stock sectors, but across broader asset classes, bonds, commodities, is the key to managing against downside risk and achieving consistent long-term returns. Thanks for joining me for this latest market insight, and I look forward to seeing you again soon.